Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. And that's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking American Express. We're talking consumer spending. It seems like, people switch from buying goods to buying services, travel, things of that nature. That seems to be right up the pipeline for American Express. People are out there traveling. They're out there spending, right? What kind of data are you guys seeing out of LikeFolio ahead of these earnings? Stocks outperforming the overall market at this point, down about 12% this year, but it's had a rough couple months here.
Yeah, so whenever we look at American Express, we're listening for mentions from consumers who are talking about, signing up for or using an American Express card to pay for a purchase. And when we look at these demand mentions overall, you can see that in the third quarter that they're about to report, that demand is about 57% higher year over year. And this is pretty strong, right? This tells us that consumers are spending, that health is there. However, whenever you look at this comparatively, we are starting to see a little bit of a slowdown in the growth rate of spending. So you can see the bar that I've got highlighted here. That's the quarter that American Express is about to report, up about 57% year over year. This is about flat on a quarter over quarter basis. But if you look at how that growth rate is trending, just to give you some comparative values, last quarter that growth rate was plus 84% year over year. And in that current quarter, which we're only a couple weeks in, so this is still pretty early, but that growth rate is pacing about 28% higher year over year. So you can see kind of some tempering in that growth, but overall, that demand, that usage rate is still increasing. And a lot of that is driven by what you keyed in on, an increase in consumer spending on travel and entertainment, which is right in American Express's wheelhouse. So when we look at mentions for people who are talking about booking a hotel, going to a concert, traveling for work specifically, all of these trends are higher on a year-over-year basis. And so this is what I think last quarter drove success for American Express, and we still see strength in this travel and entertainment sector.
Megan, I think American Express is, let's face it, it's a different type of credit card, right? Because they are more focused on travel and entertainment. But Megan, I have a phenomenon to talk to you about. Let's talk about their biggest growing segment of American Express, and that is Generation Z, the early 90s to the late 2010, right around there. That age group is their biggest growing segment. They are 60% of their new cards. They are 75% of their new gold and platinum cards. Megan, I own 5 of these Generation Z people. I have them, and I'm telling you right now, they have better credit profiles, they're more engaged, and they outspend previous groups. That's what American Express is saying, and I can vouch for that. My children travel more than I do. They own a home earlier than I did. So is this the group that's going to power American Express? Because they seem to favor American Express over other brands, and it seems to be working, Megan.
Yeah, I think that one thing American Express is really good at is providing that premium experience. And we see this a lot whenever we look at consumer happiness levels. When we look at American Express versus, say, Visa versus, say, Discover, that consumer happiness level is at the top by a couple of points. And so they provide a perceived, premium experience that is drawing in and keeping this consumer base happy, which I think is what that generation that you're hinting at is after. And it also shows a priority among this generation for this value of experiences versus necessarily things. And I think that's where this travel and these entertainment trends really come into play and serve as significant tailwinds for American Express, because this is what's driving those purchases. And according to our data, that usage rate and the purchase and the spending on these areas still continues to be strong.
Yeah, Megan, going into a potential recession, I think that's the key with credit card companies. The write-offs are, at or near record lows at this point. So we haven't had any credit crisis at this point. So it's not reflective of the consumer kind of pulling back that kind of recession. But is that what makes American Express, based on your data, the one caveat that might actually hurt this company moving forward? Because if, maybe the holidays come through, spending's decent, not comparable to 2020 and 2021, of course, but is that what makes them susceptible moving forward, is that, hey, everything's more expensive, people have money saved, but they're starting to go through that. Now credit cards are going to come into play, and after the holidays, we might see a really big, massive slowdown in consumer spending.
I think that that's valid. Whenever we look at just overall credit trends, so mentions from consumers who are talking about opening up a new credit card account or canceling a credit card account or maxing out their credit card, we're starting to see some signs of stress on the consumer. Our mentions of maxed out credit cards are up by about 10% year over year. Meanwhile, opening new credit cards is down by 1%, and paying off credit cards is down by about 17% year over year. And this is just in the last 30 days. So I think that we're starting to see signs that the consumer is getting stressed. However, American Express may be insulated more so than other cards because of the premium nature of their card and because of the clientele that they attract. I think the fees on American Express just annually is anywhere from $250 to $700. So you're naturally attracting kind of this higher end clientele. And we see this reflected whenever we look at, companies in the LikeFolio universe. These luxury or these higher end brands so far have been more resilient versus, just average or lower end brands. And so I think that this is one way American Express kind of differentiates itself, is because it's serving this higher earning client.
Yeah, that's a great point, Megan, because we've seen that not only in the retail space, but also the restaurant space. It seems like we're getting more resilience out of the, the higher earning class of people that are using these cards. So maybe that'll sustain them a little bit. Do you guys have an earnings score going into this report tomorrow morning?
Yeah, heading into this report, our earnings score is a -10. So that's neutral in our universe. And the reason that it's slightly negative is because of that slowdown in that growth rate, like I talked about. Whenever you look at that demand chart and you see purchase intent up 57%, that seems really tremendous. But whenever you compare it to last quarter, that was 84%. That's a little bit of a slowdown. So that's the reason there. But we're still recording growth overall for American Express.
Okay, American Express, neutral is slightly lower based on that data. All right, great stuff. As always, Megan, thank you so much. Have a good day.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at LikeFolio, helping us break down the data here. Kev,